Hey everybody, how is it going today? Welcome to the channel if you're new. Welcome back if you are not. In this video, I want to talk about the stochastic oscillator because in this environment, it's working a little bit better than normal. So even if you are familiar with this oscillator, I'm going to show you a little nuance or distinction that I use with the stochastics in my trading to optimize my results and screen out potential false signals. All right, well, before I get into the charts, I want to give a brief history on the stochastic oscillator if you've never heard of it before. The stochastic oscillator was developed in the late 1950s by a man named George Night Train Lane. George Lane worked as a floor broker for 10 years and is the former owner of the regional brokerage firm Miller, Lane and Company, which at one point had 41 branch offices. He was a director of research for two other brokerages, author of 4 courses in commodities and 1 for the stock market, and spent years traveling around the country teaching farmers, ranchers, and other producers how to hedge the risk of production in the futures market. But more than anything, Lane is known as the father of stochastics. As designed by Lane, the stochastic oscillator presents the location of the closing price of a stock in relation to the high and low range of the price of the stock over a period of time, which typically the 14-day setting is used on it. Lane, over the course of numerous interviews, has said the stochastic oscillator does not follow price or volume or anything similar. He indicates that the oscillator follows the speed or momentum of price only. Now, Lane also reveals in interviews that, as a rule, the momentum or speed of the price of a stock changes before the price changes itself, meaning the stochastic oscillator leads price where most indicators lag price. So the stochastic oscillator can be used to predict reversals when the indicator reveals bullish or bearish divergences. This signal is the first and arguably the most important trading signal that George Lane ever identified. All right, so the first chart I want to get into is actually a random one I grabbed off the internet, and there isn't even a name here in the corner, so I'm not even sure who this chart is of, but that's not a big deal. This is for illustrative purposes only. I just wanted to show you what the chart is that I like to look for the best when I'm using this indicator. I like to look for charts that are going sideways. Let me see if I can get this to work. There we go. I like to look for charts that are in a consolidation or are channeling. I personally don't like to use this when a stock is in an uptrend or a downtrend. I know some people have a lot of success doing that. I did not have a lot of success using this oscillator in a trending stock. You know, a lot of people wait for it to start to go up like this, and then once it pulls back, they look for that point to get in on that swing to try to catch that next move up, and they're looking at that stochastic. They're waiting for that to cross above this oversold area, cross above this 20 line before they enter it. But like I said, me personally, I just had a lot more success using this when stocks were going sideways. And in this environment, when a lot of stock charts are starting to look like this right here, you know, these stocks look like they're starting to gain some momentum. They look like they're ready to break out, and then they just reverse immediately and fall right back into the consolidation. I'm just noticing that we're seeing a lot more of that today. Lately, I've been buying a lot less breakouts in this environment and looking to either sell my stock or short it when it gets up here, and I've been looking to buy near these support areas once the stochastic starts to cross through that oversold line and starting to head back up. But as you can see on this chart, using this indicator works absolutely brilliantly. Like when a stock goes up into this oversold or overbought area, I don't immediately sell my stock or go short. I wait for it to start to cross down and for it to break below the low of the previous day's candle. I don't just buy or sell a stock once it gets into this overbought or oversold area. I like to wait for it to cross below the low or the high of the previous day, depending on what side you are on. So if you're buying this dip right here, you wait for it to start to go up through that 20 line, and you also want it to be breaking through the high of the previous day. But that's not the distinction or the nuance I want to talk about. I'll get into that when I get into the real world charting after this one. I just wanted to explain how I like to use the stochastic oscillator on a regular chart. But as you can see, when a stock is channeling Once it gets into these overbought ranges, they tend to turn around and head down rather quick, and then you can just wait for them to get into these oversold areas and then start to, you know, turn back around and make a new relative high and ride them for as long as you can. Sometimes I like to sell in increments as it gets into this bought range. Some people like to wait until it starts to turn down. It's totally up to you. But as you can see, there's a lot of fantastic signals you can get on these stochastics when you're finding a channeling stock or a stock that has been trending sideways, having a lot of false breakouts and a lot of false breakdowns. Like when it turns right back up, these signals can be absolutely dynamite. So this is one of my favorite indicators to use on a chart. But let's get into some real world charting, and I'll show you what I was talking about earlier. All right, so let's get to this real world example. Right here I have the IWM pulled up, which of course is the iShares Russell 2000 ETF. If you are familiar with my channel, you know I love looking at this one as far as market direction goes. I think this is the main reason why stocks have been so choppy. It seems like forever, for at least the last 8 or 9 months. Because this thing is just stuck in a trading range. This thing has been going sideways for, geez, probably 9 months or so. But I am of the opinion that if we can get a breakout on the IWM above this box here and a hold, I think the markets are going to be off to the races again. That's going to be safe to buy more of those breakouts that were working so well, you know, last year and the year before, at least for me anyway. But every time the IWM comes down to this lower end of the range, when the stochastic is in the oversold setting, I've been adding to my stock positions, regardless of, you know, how scary the market might be looking when it's pulling back. But on this one that we had in the middle of August, I added more stock than usual. And it was because of that distinction that I was telling you about. It's because it had a MACD positive divergence on the 15-minute chart. So that let me know that that signal that it was going to possibly be heading back up was probably a little stronger than normal. I know on this chart right here, you can see that it's been pretty clean as far as getting into the overbought and the oversold range and then turning around. But if you flip through other charts, you'll notice sometimes the stochastic will just kind of hang out in the overbought area for quite a while or the oversold area for quite a while. It'll kind of look like it's going to turn around a couple of times, but it'll give you a false signal. Now, I notice if I look for a divergence on the MACD on the 15-minute chart, when the stochastic is in one of those ranges, that screens out a lot of those false signals. So once I get a stronger signal like that, I'll usually buy a little bit more stock. And like I said, that's exactly what I did on this pullback in the middle of August. And let me go to the 15-minute chart and show you what I am talking about. Let me pull it back here. And actually, let me zoom in a little bit closer so you can see it better. But I was talking about this little bottom right here. As we can see, the IWM made a lower low right here, but the MACD indicator made a higher low. So when I get one of these divergences, when a stock or an ETF is in this oversold range and starts to turn back up, that's usually a stronger signal than normal for me, and I'll usually add a little bit more risk than I typically would, just because, you know, the probabilities seem like they are a little stronger for me. Now let's go back to the current setting or time frame. Then go back to the daily chart. And as we can see right now, the stochastic is just barely above that oversold reading, but the IWM hasn't really pulled back all that much, so that is a very bullish sign. If the IWM can get turned around, I think there's a pretty strong possibility it's going to be testing the upper range of this consolidation. And if the IWM, fingers crossed, can break above that and hold, that is going to be a great sign, in my opinion, for the market. So I am like hoping, wishing, praying for that every time I look at the IWM. But I just wanted to show you guys that distinction with the MACD to help you screen out some of those false signals if you're getting some of them on that stochastic indicator. If you use it, it'll just make it more effective for you. Oh, but before I close out the video, let me jump over to another stock chart real quick. I don't know if you guys are familiar with Dutch Brothers Coffee, but they just went public today. One of the guys in the Patreon pointed that out for me. Oh, and by the way, none of this is investment advice. This is for entertainment purposes only. Please make all of your own trading decisions. And I do have a Patreon down there for a measly $10 a month. You can join and see what we are trading in real time if you like. But getting back to this Dutch Brothers, they don't have any in the area where I am at, but every time we go to the West Coast, my kids love this place, and it's so horrible taking them there because the lines are so long. This place does so much business. I always told myself if they ever go public, I'm going to have to buy their stock. And if this company can continue its popularity and continue to expand, this thing has huge growth potential ahead of it, in my opinion. I haven't even looked at the valuation right now, so I'm sure since it came public today, it's probably overvalued. You know, IPO means it's probably overpriced. You know, the IPO is an exit strategy for people that are in the company to, you know, sell shares, and they're not selling it on the cheap. So just keep that in mind. But if you haven't heard of this company, take a look at these. I think these guys have a great chance of becoming, you know, close to as big as Starbucks, maybe half as big. If they do, it's probably going to be a monster gainer. But very thankful that the guys in the Patreon pointed this out to me. I don't know how. I think when I looked into this stock a couple of years ago, I think they were saying like they had no interest at all in going public. So, I mean, I just totally took them off my radar, but definitely take a look at Dutch Brothers. Oh, and one more stock before I get out of here. I got to leave you guys that like watching my charts for the swing trade. Let me see if I can get in the right PXLW. There we go. Some of you guys who like watching my channel for the swing trades, this is the one that I am the most excited about right now. Let me see if I can get this one out of the way a little bit, move up the chart a little bit. But PXLW has been pulling back for a couple of weeks now, but it looks like it could finally be starting to bottom. If we go to the 15-minute chart, back it out a little bit, you can see it made that false move down that I love to see when it's another sharp move back up into the consolidation. I think if PXLW can break above this area right here, call it 545 and hold, I think PXLW could be ready for its next swing move up. So I'm going to be keeping a sharp eye on PXLW. And of course, from the previous video, one that is working out pretty well, I did not end up buying any of this one, but SHIP is definitely looking like it's going to be holding this breakout. So I think SHIP is looking super good. But I just wanted to show you those two before I ended the video. All right, guys, well, that's all I have for this video, so I'm going to end it right there. But if you have any questions about any of these stocks, or if you have any other stocks you want me to take a look at, please leave them down there in the comment section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button for the YouTube algorithm and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, guys, and until next time, take care.